Hi, everyone. Thanks for joining us today. I'm Louis Baca, your host of Bacast. I have Christopher Handy, certified reverse mortgage professional. And that status, that designation is hard to come by. The National Reverse Mortgage Lenders Association out of Washington, D.C. does not hand this designation out to just anyone. Out of hundreds of thousands of loan officers nationwide, less than 250 loan officers have the designation that Chris has. So we're very pleased to have you with us today, Chris. Would you mind going over what these different options are for senior homebuyers in today's environment?
Sure, Louis, more than happy to. You know, typically when someone is looking at relocating or downsizing into their forever retirement home, if they have the proceeds available from the sale of their family house, typically they're looking at paying cash. Now, why are they looking at paying cash? Because they don't want a monthly mortgage payment added to their retirement budget. And so they're looking at houses in a certain price range. But when you couple that home purchase with the federal government's FHA-backed insured reverse mortgage program, you're going to give yourself many more options. Let's just take a case study, okay? So let's have a couple that's 68 years old and they have $300,000 in proceeds from the sale of their previous residence. Now, typically, they're going to be looking at homes up to $300,000 and maybe only up to $250,000 because they want some money to decorate the home and maybe change landscaping and, you know, make the home the way they want it to. So maybe they can't even spend that entire $300,000 cash-wise to eliminate the need for a monthly mortgage payment. Well, if you use a federally insured reverse mortgage to purchase the home, you're going to give yourself a lot more options. So first thing, double your buying power. If you are looking at homes in the $300,000 range, now you can look at homes up to $600,000. I mean, how many times have you been kind of thinking, okay, this is the price range, $300,000, but you love the home that's $350,000, or you love the home that's $375,000, or even $400,000, but it doesn't quite fit what your plan is. So if you use the federal government's reverse mortgage program, you can double your buying power and still not have a monthly mortgage payment. You can look at homes up to $600,000. And the mortgage will be paid off when you pass away and your estate sells the home and use the proceeds from the sale of the property to pay off the balance of whatever it is at that time. But while you're living in the house, you don't have to worry about monthly mortgage payments. So you could effectively double your buying power. The other thing you could do in my example here is take that same $300,000 house, but instead of putting $300,000 into it, you can put $150,000, maybe as little as $130,000, depending on current qualification figures and interest rates, and maintain that money as part of your retirement portfolio while you're living in the house. So you don't have to be house rich and cash poor just to avoid a mortgage payment. Or even if you're not cash poor, an extra $150,000 in your retirement account is really going to help stretch things out. So you're not out the money, it's just a better way to manage it. And maybe no matter which one of these choices you do, if you did decide to make a mortgage payment temporarily, you can start and stop mortgage payments anytime you like to. So I get some folks that are saying, well, you know what, we'd like to throw $600 a month at the mortgage, and maybe we'll pay on it for 10 years and decide that's enough. Well, since most of these are set up on a credit line, anything you pay in can be pulled back out. But on a home equity conversion mortgage, not only can the money be pulled back out, you get growth on the money. You get equity access growth on the credit line tied to the interest rate. So if the interest rates are over that 10 years have averaged 4%, now you get a 4% return on any of the payments you paid in when you pull the money back out. So in this case, a $600 a month payment for 10 years would have grown to $92,000. So the neat thing is, no matter which one of these options you choose, you might decide that you want to make a mortgage payment of some kind of against the balance. But again, that's up to you. It's you can decide when to start and stop payments at any time. But an example would be, say these folks bought this house and they decided that they're going to pay $600 a month against the balance and the interest that would normally be assessed on the property. They still want their tax deduction for paying interest monthly, and so they're going to pay $600 a month and then stop after 10 years. So because most of these are set up on a credit line, the money can be drawn back out at any time in the future. But what's neat about the home equity conversion mortgages is you also get credit line growth on that money too. It's tied to the interest rate. So if interest rates are 4%, thereabouts, you're going to get a 4% return on any payments you pay in. So an example on this would be that if someone paid $600 a month for 10 years, they would have built up a credit line of $92,000. And not only could you stop making payments at that time, but then you could pull out the $92,000 you wanted. Just up to you. It just gives you more choices in how you want to manage your money.
Wow. So the key here is the freedom to choose what you want to do. And this is redefining financial freedom. When you put 100% of your eggs in one basket and you have all your money tied up in your house, it doesn't sound like a lot of freedom to me. But when you follow the lead that Chris is bringing here by giving you the options and you get to make the educated decision as an adult, that sounds like a pretty good reason to be able to utilize this home equity conversion mortgage. Chris, how does a senior home buyer get a hold of you to go over these options?
Well, first thing, Lewis, is they're going to want to talk to me to see about getting pre-qualified and look at what their options may look like as far as purchasing and down payment and those combinations, because the amount that folks qualify for are determined by their age of the youngest home buyer and interest rates. So we want to kind of look at everything and decide where they're at, and I can do a pre-qualification for that. And if they want to reach me by phone, they can reach me at 775-777-5669 is my direct line. My email, chandy@genevafi.com. Or they can visit my website for additional information. The website is www.rm, like Mary for reverse mortgage, FORseniors.com. So that's www.rmforseniors.com.
And I'll post all of that information below. Chris, it occurred to me, what if we have somebody watching right now that says, man, that sounds like a great idea. I just don't have the credit score to qualify for that. What kind of credit score requirements are for the home equity conversion mortgage that's insured by the Federal Housing Administration?
Well, there really isn't a credit score that drives approval on these. They look at a general payment history, especially the last 24 months. But certain things can be forgiven, especially if something came up medically related that was a temporary interruption in finances and that sort of thing. We can still get that approved. So it's a case by case basis, not rather than being strictly income and credit score driven. So again, that's where you want to have a conversation with me to kind of see how it would work out in your situation.
So don't disqualify yourself. Unless you've spoken with Chris, don't disqualify yourself. Pick up the phone, call Chris today, and he'll help you with your home purchase. Thanks for joining us today, Chris. Have a great day.
Thanks for having me, Lewis.